Hi, this is Neil, and I'm partnering with the great HPC today to bring you the Surfactant Insights Podcast. Someone reminded me recently that the business of chemicals supports 25% of the US economy, and further that 95% of manufactured goods are dependent on chemicals. Now, I guess I knew this. It's been part of the American Chemistry Council's communication for some time, but it's easy to forget. However, she then went on to wonder, how come at least some of these essential chemical companies are not enjoying AI-like valuations, are not vying with companies like Apple, Amazon, Alphabet, and Palantir for the attentions of investors? It's a reasonable thing to ponder. You know, right now today, Palantir stock is trading at over 100 times sales. That's sales, not earnings. 100x. Dow Chemical is trading at 0.4 times sales. 0.4x. Now, sure, maybe I'm picking extremes, but I think you get the point. Essential doesn't necessarily mean valuable, at least not today. Maybe that's the lesson. Or maybe it's just that until today, to get intelligence, you needed first to get or have work for you humans. Humans take time and nurturing. They're complex. Now you can get intelligence by putting money into compute and a little programming, which AI is going to do for you anyway. That's the expectation behind much of the valuation of these tech stocks. Let's see how it all pans out. It'll be interesting for sure. I say all this by way of preface for today's topic, investing in surfactants. I'm regularly approached by folks seeking my advice on this very matter. They may be stock market investors seeking to understand the business of Stepan or Croda. They may be private equity companies studying a buyout, or venture capitalists analyzing the prospects for a startup. They're often founders with a new technology that they'd like to apply in the field of surfactants, to disrupt it more often than not. Sometimes they are companies who have been in the surfactants business for decades and are contemplating extending that involvement to a new market, product, or geographic area. My initial reply to all these approaches usually follows the same pattern. Are you sure? Why are you considering this? And then, further along in the discussion, I'll inevitably caution or remind them that surfactants are chemicals, and chemicals, as I noted as recently as this month in the blog, take time and money. Now, to the seasoned chemical companies who've been in surfactants for maybe even 100 years or more, this is not a surprise. But for the early stage companies and their founders, this can be a harsh message. And look, I'm not trying to extinguish that flame of enthusiastic optimism, merely trying to arm these newer entrants with knowledge of how things are and have been, so that they are better prepared for their mission to change them. So, I think by now I've provided you with enough caveats for the observations I'm about to make concerning investing in surfactants, an almost $50 billion global business woven into every aspect of life on this planet, a truly essential part of an essential industry. First, the public markets. More caveats. I don't give stock investing advice, and I don't even own any individual stocks, let alone chemical or surfactant ones. If you wish to invest in surfactants via the public markets, your options are limited. I'm not aware of any surfactant-themed ETFs, and indeed there are only a few publicly traded, pure-play surfactant companies. Stepan's the best example. They've been on the New York Stock Exchange for 30 plus years, and their business is around 70% surfactants. Croda is another. They're heavily surfactant dependent and trade on the London Stock Exchange. Galaxy Surfactants trades on the BSE in India. Indovinya, part of Indorama, has announced plans to spin off as a separate surfactant company on the New York Stock Exchange. This is expected to happen soon. They will be a large, pure-play surfactant company. So, let's see. Should you invest in, say, Stepan or Croda? I don't know. Over the long term, 30 years or so, they've done okay. Since enjoying an early post-COVID boost, both stocks, however, have had a rough ride, to put it politely. But again, should you invest today? I really can't say. So, let's turn our attention to the private markets and specifically to venture or startup type companies in the surfactant space. Recently, there's been a flurry of interest and investment in biosurfactants and related bio-based platforms for surfactants and intermediates. I refer to this as the second wave, coming after the early 2000s efforts by companies like Solazyme and Amyris, directed at least partially towards surfactants. Much of this second wave has been led by brand new companies formed specifically for the purpose of commercializing new surfactants. Companies like Holoferm, Amphastar, and Logos. Some substantial leadership has also come from very well-established large companies like Evonik. Much of the technology here is fermentation, and many of the products are some variation on glycolipids like sulforolipids and rhamnolipids. Interesting facts. Rhamnolipids have been around in the academic literature since 1946. Sulforolipids since 1961. Chemicals take time. But it's not all fermentation. There are companies developing the use of abundant and cheap feedstocks like carbohydrates, fatty acids, and cellulose in surfactants via catalytic and other methods to make novel, renewable, and high-performing products. Such companies include Norfolk of Denmark, Dot Ingredients of New Zealand, and Integrity Biochem of the US, this latter far from a startup with a well-established production base in US, Europe, and recently Asia. And I hasten to add, I have a formal role as a board advisor to all three companies and therefore should be considered biased in my assessments of them. But let's again come to the question. Should you invest in these types of venture or startup companies? I'll spare you the frustration of my prior answer regarding the public markets, although it goes without saying that each opportunity should be evaluated on its individual merits. I will say that the surfactant industry today seems more open to change and to new concepts than I have ever seen it. This openness I see up and down the value chain, including at the big consumer goods companies and the large industrial users of surfactants in areas like agriculture and the oil and gas field. It includes a willingness to take a fresh look at some very well-established petrochemical intermediates, as well as the willingness to put RhamnoClean on the dishwash bottle, a sort of Intel Inside move by Unilever in their labeling of sunlight in certain Asian markets. So, an investment of time or money, and we frequently exchange one for the other in our professional and personal lives, into some of today's new surfactant activity would not be a counter-trend move. It would bring the investor, especially if they take more than a passive role, interest, intellectual stimulation, excitement, and fulfillment. These, I am certain, with the right attitude, are highly likely outcomes. Not certain, however, are attractive financial returns. Given the size and essential nature of the surfactant market, the opportunities for such returns, I believe, are there. And that's as far as I'm willing to go. But I hope you find these perspectives useful, and as always, thanks again for listening.